Hello traders! So, last week we talked about a simple and powerful trading strategy that you could implement in your trading career to increase your odds. This week we'll be talking about another strategy that you can add to the last week. So, before we start, we have to review the four main principles that you have to look before taking a trade. Let's look at them. As you remember, before taking a trade, you have to understand the trend, where it is going, if it is a bull trend, a bear trend, or you are in a range, and you have to have the LST, the level, the signal, and the trigger. Today, we will add the Fibonacci to our level. We will not be looking to take the trade on the last support and resistance, but you'll be looking at the Fibonacci retracements. With this one, we'll be looking for the golden box. The golden box, it's when the price retraces to the 50% or the 61.8% of the last move. This is a great place to place your levels. Usually, the market retraces to the last support or resistance, or it retraces to the last 50% or 61% of the move. You have to be looking at this level, like a brick wall. If the prices comes back to this level and it breaks it, it invalidates your trade. If it bounces, you can take it. So let's have a look at the market and the strategy in real life. We will be looking at two charts. Let's start with this one. What do we have in here? We see that we were on a bull trend, making higher highs with higher lows. We broke our trend line and we made a lower high. So, what can we look for? When we broke the trend line, you wait for the pullback as always. You can use our Fibonacci retracements and wait for the price to come to our golden box. When we are on our golden box, what do? We draw our box, our little box around the range. Right? Now, we wait for the price to close outside our box to the bear side, because we are looking to take a bear trade, and we take our trade with the stop loss always above the last movement and at least a 1 to 1.5 ratio, ideally 1 to 2 or 1 to 3. And this was a great trade, as you can see. Let's look now to another example. In this example, you see that the price was going up, it went down, and it went up again. So, in here, it was going up, it broke our trend line, right? We can draw another trend line, bear, and we see the price that it breaks our trend line again. What do? We draw our Fibonacci retracement and wait for the price to come to our golden box. When the price comes inside, you draw our box around the price and we wait for the price to break our box to the side you are looking to take the trade. In here, you could take a long position, at least a 1 to 1.5 as always, and it was a great trade. The last two trades were taken on a daily time frame. Now we'll be taking a trade on a 1 hour time frame just to show you that you can use this method on every time frame, the time frame you like and the time frame that suits your lifestyle. So in here we see that we are on a bear trend, we are going down, making lower lows and lower highs. We made a movement and we retrace. So let's see how much did we retrace. We retrace to our golden box and we break below, right? So now you could take out your trade, stop above, at least a 1 to 5, 1.5, and as you can see, it was a winner. This trade was taken today. Not all trades work like this one. You have to be careful and you have to manage your trades. Not all trades are winners. This method will only increase your odds. Never take a trade just because another person tells you where he thinks that the market will go. You have to have your own method and you have to have your levels, your signals, and your triggers. If you want to understand more about those, have a look at my last video about the powerful trading strategy. Thank you and see you again.